Welcome to 2021. We're not there yet. It's 2020 when I'm recording this video, but it will be 2021 pretty darn soon, and maybe when you're watching this video. So let's talk about tax rates. Let's talk about the beautiful state of Hawaii, one of the states that I have never been to. As soon as all this COVID stuff calms down and everyone gets vaccinated, I'm definitely going to swim to one of the islands and check it out because I've heard nothing but gorgeous things. So we're going to talk about Hawaii tax today, how to calculate Hawaii tax. What you're looking at is the coolest payroll file in Microsoft Excel ever built in the universe ever. That's right. Yep, you can hold me to that. It's going to have all 50 states before 2021 starts. We are alphabetically on Hawaii, so I got a lot of work to do, but Hawaii's done and it's pretty easy, so we're going to talk about Hawaii today. So what you need, if you have an employee, if you're blessed to be in the state of Hawaii, what you're going to want to do is you're going to want to have your employee fill out a Hawaii W-4 form. I have some links in the file. They're going to pick a status right here, single, married, married if they want to hold at the single rate, which is just like calling them single, or if they're not taxable because of disability, or for military spouses as well, non-resident military spouses, I guess, don't have to pay tax. And then they're going to pick the number of allowances, which they're going to end up putting in four here, in line 4, and go through and figure out what their allowances are. Similar to the old W-4. So that number is what's going to go right here. Now, in this payroll file, we can toggle and see many different states and what they are asking for in these titles here. So with Hawaii, when you toggle and choose Hawaii, it's my face is probably in the way. Sorry, you can toggle this. And choose different states. Georgia's asking for dependent allowances. Hawaii is just asking for that one set of allowances, and this secondary allowance thing is not even used. So you just put the number of allowances, and also you choose the filing status from a drop-down menu over here, which I have set up. Once you do that, calculating the tax rate is actually reasonably pretty easy. So they've updated, the last time they updated was 2013. And in 2013, they issued this, but this is a revised version of their tax rates for 2020. They may issue something in 2021. If they do, I'll update it, but I don't expect it to change based on the way this has been effective since 2013. So I probably would have heard something if they're doing any changes in 2021. So there's two different rates, and what you need to do is you need to annualize the wages. So you take the gross wages, or the federal taxable gross wages for the pay period, you multiply it by the number of pay periods in the year. We're looking at a weekly payer, so this person's annualized wages are $63,000. After you subtract out their number of allowances, which was this number right here, times 1,144. I believe that is the allowance amount for Hawaii. There it is. At least it was in 2020. We'll see if it stays the same in 2021. I expect it to. Actually, I don't know the answer to that. It might change. 1,144. So you're just going to multiply that by the number of exemptions or allowances, and then you're going to end up getting a taxable wage base right here. Then you can apply one of those two formulas. Really, it's going to be this one for single people, and it's going to be this one for married. And the way you can write this as a formula inside of the cell is by using something called a nested if formula. That's what this is up here. Look at a little bigger, looks at it like this. And all it does is saying if the amount of annualized wages is less than a certain amount, do this to it, multiply it by a percentage. If it's less than this amount, add a little bit, then multiply the residual by a percentage. That's what this nested if does. You don't have to do it because I did it for you. And you do it if you're single, do it if you're married, and then you choose which tax is related to which filing status, and you bring that forward to the pay stub. So you end up with a pay stub like this. You just turn around and change people. Marion Barry is not in Hawaii, he's in Georgia, but Chuck Brown is in Hawaii, and there's his check. And of course, all these, just like all the other states and everything else that this payroll file does, you'll have state reports. You choose Hawaii, and there you would have your wages, your withholding tax. And looks like that's all there is. I didn't see any paid family leave. I didn't see anything. Every state has unemployment. So at least in 2020, the first here it is, the first 48,100 wages were taxed at a certain unemployment rate. So whatever the unemployment rate is, especially now, COVID really has affected a lot of different industries related to tourism. So I wonder if the unemployment rate, like in most states, is probably going to be going up and assigned to you next year. So that's where this would go. But other than that, Hawaii's pretty easy. 5 minutes, that's not too bad. So just 2 rates. But if you're interested in this payroll file and you have a small business and you're in Hawaii or any of the other U.S. states, contact me because we are coming to the home stretch here. We are 7 days away from 2021, and you'll be seeing videos with a lot of different states coming very fast. That's Hawaii. We're going to do Iowa, Idaho, Illinois, Indiana, Kansas, Kentucky. I've done all these states already. I haven't done Louisiana. It's a new one I got to do. Massachusetts is pretty annoying. I haven't done it in a couple years. Maryland has different counties. I'll stop talking. Tax talk is boring. But you're going to see I'm going to get it done. And like I said, the coolest payroll file on the face of the universe. You can hold me to that. So good luck, everybody. Payroll should be easy, so make it so.